So in this video, we are going to talk about professional risk management, how professionals look at the market, how they handle risk, how they add on, and etc. Okay, this is a very interesting video because we're going to talk about how professionals, really deal with the market, how they look at it, and a lot of this information that's in this video right here, you don't really hear it on a daily basis, or you really can't find it on YouTube or online because you really have to be in that professional world. Okay, so let's get to it. Okay, now the first one we're going to talk about is zone risk. Okay, so what is that? So what they would do is basically they will have a zone, okay, and they say, you know what, we're going to risk this zone. So if price comes to the zone, okay, we're going to split this zone up. So this would be the first level right here. They probably do another level in the middle and do another level around here. And the stop loss would be at the end of the zone, okay? So let's show you guys another example real quick. So let's say the market is going up, it's pulling back, right, and then going up again. And let's say that they have this zone in mind, right? So they said, okay, we have this zone right here. If market pulls back to the zone right here, we are going to split this zone up and we're going to go in, right, with our size. So let's say the market pulled back to this zone right here. All right, now let's say they have $500 to work with, right, and they want to risk $500. So they will break that $500 up, right? So the first amount would probably be $100. Okay, so they probably have $100 right here. Okay, and then if the market drops some more, they will add another $100 at the second level. Okay, and the market drops some more, guys. Okay, let's say that they will risk this next levels around here somewhere. They will add the rest right here, which is $300. Okay, now I want you to ask yourself this: why would they risk the $300 right here? Why would they risk, more money at the end of the zone? Okay, well, it's very simple, guys. It's because if you win, okay, you're gonna win a lot. So I want you to think about this for a second. Imagine you having a zone right in mind, and as soon as price go to the zone, and you just risk the whole $500. Okay, now let's say that you risk the whole $500 and it goes all the way down here, right, and price bounce back up and give you a nice little one-to-one. Okay, so go right back to the high. Okay, you're happy. Yes, you got your $500. But I want to show you guys another example. Let's say that you have, okay, let's say the market goes all the way down here, okay, and basically it bounces when it gets to that third level. Okay, now I want you guys to realize you are risking this small amount right here, okay, when it gets down to here. So this $300 is risking this small amount. Okay, now if it bounced from here, I want you guys to understand, okay, you're risking this right here, okay, this small amount right here. So if it bounced right here, guys, right, that means that by the time it gets to the first zone right here, which is right here, which is your break-even mark for the original $500. Okay, so you're risking this tiny bit right, this tiny bit right here. So you get this right here. So this X. So if it moves up one, this is a 1-to-1. Okay, moves up again, 2-to-1, and it moves up to the break-even, guys. Okay, you have to understand, when it goes to the break-even mark, you're up 3-to-1. Okay, so 3 times $300. You're up $900, okay, on one trade. I want you guys to basically rewind this tape so you can understand what I'm talking about, okay? So I'm gonna go over it real quick so you guys can basically get it again. So imagine you have a zone and you say, you know what, I'm just gonna put, if it comes to the zone, I'm just gonna put my whole $500, okay, and I'm not gonna split it up. It's gonna put the $500, okay, and if it bounce, give me a nice one-to-one, I'm gonna make my $500, right? Now let's say that you risk that $500, but let's say it goes all the way down to here, right, and then it comes back to here, your entry. Okay, guess what? You at break even, right, with your $500. You at break even. That means you ain't make no money at all. But let's say that you split it up this way, $100 here, $100 here and $300 here. This $300 right here, okay, once it gets to this level right here, which is the break-even level when you risk your $500, you're up $900, okay, with this alone. So that's why they will risk more when it goes to the stop level, okay. They'll risk more because if it goes their way, okay, they can make way more money, okay. So break-even level, they are up $900. Now imagine if it just go back to the high. Originally you want your $500 to go back to the high, right? So imagine this trade, guys, okay, you're still holding this trade and it goes back to the high. So it's not only $900, guys, okay, it's going to be way more than $900. It's going to be like a 7x trade, okay. So that trade alone is going to probably make close around $1,800, $2,000, and we're not even talking about these trades right here with these extra $100. So this is one way how professionals look at the market, okay. So let's go to the chart, show you guys, and break it down real quick. Okay, so this would be you know, a good example right here. The market popped up. We're looking at this level right here, okay. Let's say that the level we want to go in as soon as it hits this level, and as soon as it goes down more, okay, we add some more, okay, at this level, and then it goes down even more, we add some more, okay, and then we wait for a price to bounce up, and once it bounces up, it's going to give us our profit. And if I see this right here, guys, I'm definitely going to hold for a lot more. So imagine I'm having $300 here. We're talking about close to $2,000 or more on this trade alone, and we're not even talking about the extra, you know, 2 trades that we had right here, okay. So that's the first way professionals look at the market. They do zone risk, and the reason why they do this is because you have to understand these guys have a lot of money, so they don't want to buy right away. They want to split up their positions. So that's one way they look at the market. So let's go to the next way. Okay, so the next one is basically you know, going in small, and when you're seeing confirmation or some type of, you know, you seeing the market going your way, then you will add bigger. Okay, so let me show you guys an example right here. So we have the market going up right here, nice, right, and it's pulling back right here to this level right here. The way I would do it, if I'm using that 4-minute level, I would go to the 1 minute. Okay, so let's say I get in, okay, without any confirmation, I'll go small size right here, right, and let's say I'll put my stop loss right here, small size, put my stop loss right here. Okay, now once I start to see, okay, confirmation, I will add more. So a confirmation on a 1 minute to me is maybe a lower high. I'm not looking for a specific one candlestick because it's a smaller time frame. So smaller time frames, I'm looking for a little bit more confirmation. Would be like a lower high or some type of consolidation break, trend line break. So what do we see here? We see another lower high, so I will add another position right here. Now I don't have to go heavy, just add a little bit more, okay? And this is if I'm trading like big size, right? So if you had, you know, you add some more right here, and let's say that you're really convinced about this level, okay? Because you also see a nice little trend line break. So what you're gonna do is your initial risk right here, okay? You can say, you know what, I'm gonna risk this now, okay? I'm gonna move up my stop loss, and I'm gonna go heavy on this move, okay? And that's what a lot of professionals do. They go in small, okay, just to see how the level reacts, and if things start to go their way, they start to get more confirmation, they will pile on. They will pile on size, okay? And so right here, I will basically pile in some more size right here, and once the market starts to go my way, I will start to release some profits, okay? So I'll take some profits. Now, let's zoom in out a little bit, okay? Usually, this type of style, when I'm keep on adding, okay, to my my position, I have a target in mind, okay? So this target in mind is this high right here. So let's say that's my target in mind, okay? So let's go back to the 1 minute chart. Now, the 1 minute chart, we release some profit right here. Not all of it, but, you know, a lot of it right here. Now, the market's going up. We're looking for some more confirmation. So we do have a nice little horizontal breakout right here. So I will add some more, okay? I will add some more right here. And then as soon as price goes my way, I'll release some profit right here, and then release probably all of my profit right here. And that's what a lot of professionals would do. They will go in small, okay, and then when they see price go their way, they will start to pound on and then take profit. And then if they see another type of setup to get in the market again, they will add on and then get out all of the shares at a specific level. Okay, so that's another way professionals look at the market and how they get in and how they get out. And I forgot to tell you guys, when they add on, okay, they treat every position, you know, separate. Let's say they add on when it broke this high right here, okay? This would be a separate trade, okay? It wouldn't be like they're moving up their stop loss. No, this would be a separate trade, okay? Okay, so let me show you guys another way. Okay, so the next one is called recycling shares, okay? Stock professionals do this, okay? So what we have here, a nice little pop, okay? We're waiting for price to come back to this level. Now, let's say that you went, you got in right here when it hit this level, right? Okay, so let's say that you're risking $100, okay? So you got in right here, okay? You're risking $100, and then it shot up, okay? Now you got your first $100, but you took half off, okay? So they say that you took $50 off right here, okay? Now, you still have that extra $50 running. Now, if it pulls back to this area, okay, you're going to take that $50 that you just made, and you're going to add some more, okay? And it doesn't have to come back to the area exactly to the line, because sometimes it doesn't come back to the line. As long as it pulls back, okay, they will buy some more, okay? So you take your $50 that you just made, now you're going to reinvest that $50. Remember, you still had that original $50 still on, okay? So you still have that original $50, you didn't sell that. Now, you will buy some more, okay? And if it goes up some more, so let's say that it popped up and you made another $50, okay? You'll take your profit, you come back some more. Guess what? The $50 that you made, okay, you can actually take that again and reinvest that and make more. And as soon as it pops up, guess what? You're gonna sell it. So a couple of things you can do, okay? So I want you guys to understand, the original $100 that you invested, okay, now is turning into like double that amount, because you're taking $50, okay, reinvested. As soon as it pops up, you're selling again. If it pulls back again, you're going to take that $50. You can even take, because you made $100 right here, okay? Because you took $50 right here, and you took another $50, okay? So you actually made $100. So you can actually put that $100 you made and put it in here, okay? And then when it finally pops up, because let's say that this is your initial target right here, okay? This is your main target that you're looking for. When it finally pops up, okay, you're gonna make way more money if you just, let's say you bought right here, and you're waiting for the profit to, you know, just to get to A to B, okay? So let's say that you bought right here, and you're waiting for profit to get to here to there, okay? If you get to here, okay, you'll make your money, but you'll make way more money if you take your profits, reinvest it, take your profits, reinvest it, take your profits, and reinvest it, okay? Now, does this happen every single time? No, but you have to understand, the market doesn't go in a straight line. A lot of times it pulls back. So this is why a lot of professionals, they will basically take profit, pulls back, they'll reinvest that profit, okay? So that's another way professionals look at the market, the way they play the market. They will take profits, reinvest those profits, keep on doing that until the market goes their way. Alright, so let's go to the next one. Okay, so this next one is all about taking your profits and reinvest the profits into another setup, okay? And I'm going to show you guys what I'm talking about. Now, let's say that you bought this breakout right here. So the market broke out right here, you bought this breakout, right? And let's say that your target is right here, okay? So you want to target this high right here, okay? Now let's say that this high wasn't right here, okay? So let's go to this line. Let's draw a horizontal line, right? And let's say that this is your line right here, and you know we didn't see none of this right here, okay? We broke out of here, okay? So you're waiting, okay? And the market pulled back. Let's say that you want to add some more to your trade, okay? Now you're waiting. Next thing you know, you see this nice exhausting bar. It can't close, and it shoots right up. And you're saying to yourself, wow, this looks real good. I should add to this trade right here, okay? Now, if you add to this trade right here, okay, remember, you got in right here. Okay, so I brought this to the whiteboard. so this would be much better. Let's say that you got in right here. Okay, so let's say from here to here, guys, you're up $400. Okay, so let's put that $400 right here. So you're up right here $400. Okay, 400. Now, if it goes below, okay, this right here, let's say that you're up $200. Okay. Now, once you keep that in mind, you have a stop loss. So let's say that you took this breakout right here, okay, and you put your stop loss right here, okay. Now, if it comes here, let's say that you're going to be up $200, okay. Now, once it goes here, this position is up $400, right? Keep that in mind. Now, since you're up $400, you're saying, you know what? I'm going to take some of that profit and I'm going to reinvest it into this trade. Because this market looks very, very good, I'm going to reinvest the profits. I'm up $400, so what I'm going to do, I'm going to take $200 of that $400 and I'm going to add, okay? So when the market comes back up, okay, to here, you're going to add an extra $200, okay? Now, worst case scenario, if the market comes back down and stop you out, because remember, you got in right here. So what you're going to do, you're going to take your stop loss, you're going to put it right here, okay? And remember, if the market comes here, right, and it stops you out, you're up $200, okay, from this position right here. Now, if you added $200 right here, right, if it stops you out, if the market comes back and stops you out, guess what? Now, $200 minus $200 is, you know, zero. Okay? So you didn't lose any money. I want you to, you know, rewind this video if this doesn't make sense. Now, if this market goes up, right, and you actually win, you're going to win more than $400, okay? So you're going to have your $400 right here. If it goes up here, okay, that $400 is probably going to turn into, let's say your $400 is probably going to turn into $800 plus the extra $200 you added. So let's say $800 plus another $400, right? So that's be $1,200, okay? So your reward, okay, is $1,200, okay? Worst case scenario, again, guys, worst case scenario, if it comes back and hit you, zero. You're not getting no profits, okay? But the gain is so much more because you're adding, you're taking your gains that you have already, you add into this position, right? Okay, and if it goes in your way, because remember, this is your target right here. If it goes your way, you're gonna make way more money, okay? This is how some professionals think. Now, this is one way to think, okay? Then there's another way to think. Let's say that you're up, okay, $400, okay? So let me go back here. Let's say that you're up, okay, $400 right here, right? Now let's say you want to add some more to this position, okay? You say, you know what, man, I'm going to add $400 to this position, okay? So if you add $400 to this position right here, so if the market goes up right here and you add $400, okay, and the market decides to go back down, stops you out, guess what? You're going to lose $400 minus the $200 that you have already. So that's going to be minus $400, okay? I'm sorry, minus $200, okay? Why is that? Because remember, you locked in $200 right here from this trade right here. So if you lose $400 right here, okay, you're only going to lose $200. But if you win, okay, you're going to win this extra, okay? You have, remember, you're up $400 right here, okay? If it goes up your way, you're going to have another, let's say you have another extra $800, okay, from this $400, it's going to turn to $800, and then the additional $400, that $400 is going to turn to, let's say, another $800, okay? So you have this trade right here probably going to make you $1,600, okay? Or more. So a lot of these professionals, they think in a different way, and they use different techniques. Okay, so I'm showing you guys what these professionals do, and at the end of the day, you don't have to do this, but I'm at least showing you guys different options, especially when you get to a certain level and you have a lot of capital to play with. You can start playing with these type of strategies. Okay, so let's go to the last one, guys. Now, the last one is not really a risk management technique, but it is something that a lot of professionals do. They tend to risk more on A+ setups. Okay, so a lot of professionals, they know their A+ setups, and the reason why they know their A+ setups is because they track. Okay, so that's why it's very good to have a journal. You track your setups, you track what type of day it was. An A+ setup doesn't mean, you know, a pin bar or a doji. The A+ setup is usually connected to the context, right? So let's say the market was going up right here, okay? It was trending, and all of a sudden news came in and stopped everybody out, okay? And then it shot right back up, okay? Let's say that that's one of your A+ setups. You notice that every time the news come out, okay, it would do some weird move, stop people out, and then shoot right back up. Okay, maybe that's one of your A+ setups. The A+ setup can't be just a setup alone. It can't be a candlestick alone or any type of breakout alone. Okay, it has to be, you know, something, you know, some type of behavior attached to it. Okay, so this is where your journal comes in. You basically track all your setups. What type of day it was it a trending day, was it a ranger day, did we have news, and then you're going to find patterns, and basically you're going to recognize, okay, man, this is an A+ setup. I realize every time we get news and they wipe people out, and then I see a nice little exhaustion bar, or I see, you know, this happens and this happens, then, you know, wow, like 80 to 90% of the time, you know, we go to the opposite direction. So if a professional have the data and have the stats backing that up, all right, they will risk more. So let's say on average they risk 5 grand a trade, right? If they see that, they're gonna probably risk 20 grand on that trade because they know this is a high quality setup, an A+ setup, and they're gonna go heavy. So that's another thing professional traders do. They track their A+ setups. They go heavy on these A+ setups because they know these setups are high quality setups and they can make a lot of money with these setups. Okay, so that's pretty much it for this video, guys. Listen, this type of risk management, guys, you do not have to do it right away, okay? I do not want anybody that's new trying any of these strategies, okay? You can use your regular risk to reward strategy, okay, and that's it. I just want to give you guys what a lot of professional traders do and give you guys a different way to look at the market when you're trading. Okay, so this is the end of this video, and I'll see you guys in the next video.